What's up, you guys? So in this video, I'm going to be going over how to make money in a recession and what are the best 5 ways to do so. So the markets have been extremely volatile still. A lot of people are freaking out. It seems that every time we start to level off, the markets just keep tumbling. If you really look at the volume on the green days that we've had just haven't been there. So that means that the majority of investors are, either holding on or they've sold out and they have not bought back in. And so a lot of people are kind of, in suspense, like, okay, well, is this the beginning of the end? Are we just doing a normal correction? Is there more to come? And this is just for people that, are more on the, pessimistic side of things right now and you think the worst is going to come. These are the best ways that, even when the market's going down, you can still profit from it. Because if you can only make money during the bull phase of an economic cycle, you're just kind of missing out on a lot of possible gains. So we're going to go over the best 5 ways to do so. So if you want to make money when other people are losing money, you have to keep one thing in mind. One thing, above all else, is you do not lose money. So this is Warren Buffett's number 1 and number 2 rule when it comes to investing. And it makes a lot of sense because a loss is significantly more devastating to your returns and to your mentality than a gain is. Beneficial. So first off, make sure to get out of speculative investments. You can speculate a lot easier, quote unquote, in a bull market like right now, like we've seen weed stocks, Bitcoin, certain small tech stocks and like startups. It's significantly easier because a lot of people are trying to deploy capital in anything that could be, the next Facebook, Google, Amazon, whatever. And so if you're in a company right now and it's a bit of a long shot, odds are it's not going to pan through. The majority of companies that have acquired a decent market cap now that were speculative plays probably won't make it through the next recession. So don't try to, dump all of your money into speculative plays. Like, yes, obviously the returns, if you look at like crypto, if you look at marijuana stocks right now, destroy the average returns that you get from the stock market. But you have to think about why that is. It's not like these are the first times that we've had explosive new industries to come out. Odds are that people that hold on to it through a whole cycle lose all of their money, and it just never ends well. There is a reason why the average return on the stock market over the years is miraculous if you can get over, say, 15%. You're not supposed to be getting 100+% a year. Just do not think that's a constant thing. Otherwise, everybody would be a multi-trillionaire. So, and know exactly what you're invested in. And I'm looking directly at people that are like me, you invest in tech and you invest in growth. Know what you're invested in and what happens when the market goes down. So, like, for example, like if you're invested in tech heavily, obviously when the market starts to go down, you're going to be losing a lot of money. Your companies aren't going to be earning the way that they were. They might look cheap now, and they might look cheap, say, if they drop 30%. But you also have to realize that when they drop 30% because their earnings dropped by 50%, they're still going to be just as either priced to a premium or, fair valued as they are now. They're not going to become technically undervalued unless you're banking on those earnings coming back. So just think about that, and, you have to understand that tech stocks, yes, while in a bull market they thrive, in a bear market they plummet to the ground, as I went over in a previous video. And really understand like who you are, what your financial goal is, and your kind of personality thing about it. I've made a couple of videos about really understanding like what your goals are and like how you handle like investing, whether it's handling a sale, handling a buy, things like that. You really have to like get these things ironed out prior to the recession, because if you can't figure out how you're going to handle when times get tough, when times are better than they've ever been in history, odds are you're probably not going to do that great. So, and you're probably not going to be around for the next bull market. So just get those things in line. That's just kind of a broad thing that I think everybody should keep in mind and really have that squared away before they do any type of investing, especially this late in an economic cycle. So anyways, let's get into the 5 ways to make money. So when you want to, say profit off of this, you have to realize that, okay, the whole market's going down and a lot of companies are going to be going bankrupt, or a lot of companies are going to be, going on sale, quote unquote. But, just because like, yes, that's an enticing time to buy, that's also an enticing time to make a lot of money to people that are going to buy. So one of the best ways, the most, risk to reward ways to do this would be buying a put option. So you can either buy put options in, short duration or long duration. Short durations are generally a lot cheaper, but, they're much more volatile and they're much harder to time. And, you can buy longer ones, but they're more expensive. But, that's kind of a personal preference. If you guys don't know how to do put options or really what they entail, let me know. I can do a whole video on options. I do them occasionally. I wouldn't say I'm an options trader, but I have made some money and lost some money off of options, just kind of hedging my bets. And so essentially, if you don't know anything about options, options are you buy a contract and you're betting on a stock price by a certain date. This is better than shorting that I'll get into in a second, because what you do is you can lose 100% of your money and you walk away with zero, or you can make multiples of your money. So for example, when I did a short duration call option on AMD, I made, unfortunately, I didn't sell it in time, but my contract had risen 900% within 4 hours. So I walked away only being up, I think, 72% on it, because it immediately spiked and dropped down. And by the time I, looked at the option again, it had already, retreated. But you can make a lot of money in a short amount of time using options, especially short-term ones. But you can also lose 100% of your money that you put in the option. And odds are you only want to put a small amount of money in options, because options are realistically like gambling. And so you can use them to, like, if you know that the recession's coming, obviously you can look at, say, companies that are, consumer cyclical, so like automotives. You can look at tech, so like, all of the FANG, or like, say, Netflix, for example, an extremely high PE, or Amazon. Companies that have high debt that are going to need to deleverage, or speculative companies. So, for example, like, if you could short, any of the marijuana stocks that, say, only make $50 million in revenue, if that, and then, they're trading at a valuation of 10 billion, odds are they're going to suffer a lot during a recession. So look for those kind of companies that don't have a strong financial backing, because even if they don't go bankrupt, you can still make a lot of money off of the manipulation in price and the pessimism that'll come over those stocks. Second option, and this one is one that I'm kind of introducing into the portfolio for the channel, is you seek healthy dividend-paying non-cyclicals. So this, is mainly broken down, at least from the way I look at it, into three main sectors, and that's going to be sin stocks. So you got your cigarettes, your alcohol, all that gambling, things like not necessarily gambling, but like fast food, things like that. Pharmaceuticals, you can look at Johnson & Johnson, Pfizer, AbbVie, things like that. Regardless of the economic conditions, people are going to continue to need medicine, and all of these stocks have, kind of learned that, and they don't grow as fast as they used to, but they still get a steady, giant amount of cash each year, and they give that back to their shareholders. And most of these stocks also tend to upgrade their, increase their dividends. Sorry about that. Increase their dividends during, decades upon decades. So regardless of what's going on in the environment, they will upgrade, say, their dividends by 10-20% a year, if they're a fast-growing dividend. Or they start with a high yield, and you can just walk away, getting 3 to 4% returns off the dividends anyways. And then you can go into consumer staples. So this is like, Procter & Gamble, Clorox, Pepsi, Coke, things like that. Just things that, it's like either basic food or basic household necessities that people are going to continue to buy regardless of the economic cycle. All of these companies, they don't grow as fast anymore, but they do pay a nice, healthy dividend normally. You do want to be careful, though, just a little caveat to that. Be careful of the payout ratio. Any company that is currently paying out, over 100% or something like that, unless it was an individual, like, for example, with Pepsi, and it was just a little scrutiny between, changing all the tax regulations and things like that. They ended up taking a quote-unquote loss, but their earnings were up, things like that. Unless it's in one of those special cases and the company's, been paying out like 120 PE ratio for the last couple of years, odds are they're going to get hammered when, the recession comes, because generally they have a lot of debt, and all that debt's going to get called, and it's not going to be good. Way number three is you look towards commodities. Now, the most popular commodities and the most attractive looking ones right now that I see are gold, copper, and silver. And now before that, you just buy a commodity just because you assume, like, okay, recession comes, commodities go up. That's not exactly what happens. And depending on which commodity goes up the most and which one goes down the least is going to be based off of what type of environment you're in. So make sure to, do research about that. Read the Ray Dalio book that I link in the description below. Great book, kind of give you an insight as to what will be going on in our environment and other environments. And so just for like an example of an environment is when you say if you're in China and you hit, all of the debt, say if it's denominated in dollars, and everybody starts going down and then the dollar gets stronger, your debt will become, if the dollar becomes stronger, and then in your currency becomes weaker, you start to hit inflation, and then that is when the value of gold reasonably speaking, will go through the roof. So like if you look at like in 2008 when all that debt, just got popped and we ended up just flooding debt into the country. Gold went down 25% when the overall market went down 60, I believe. And then it rebounded by 2011 and went up 150% from its trough roughly. So gold was a great commodity to play in the last recession. Not every recession will play out the same for gold or silver or copper or whatever, but generally one of these hedges of the solid, fundamentally used element will be very profitable going in and out of a recession. You can invest in bonds. So this is probably the most boring approach to make money in a recession, but it's, it has its use. So like if you look at all great investors' portfolios, they all have some percentage of their account located in bonds. Look at Warren Buffett; he is heavily in bonds right now, but it's not the 20 year treasury that has like I think a 4% or something like that. You go for short-term duration bonds, and that's realistically a savings account that's going to give you slightly better than your personal savings account as far as interest it's accruing with the coupons you get. And all that you're doing here is you're protecting your capital and you're just looking for a better investment. So like, especially like if you don't want to go short or you don't want to buy put options on something, you need a place to park your money, because odds are you can buy the companies that you plan on holding through the recession at a much better price. So definitely, hold on to cash and hold on to bonds, just that way you can buy more of them on the dip and then inevitably make more money on the rebound. So, really boring, but definitely crucial, and definitely look into that. I know no one, including myself, really takes bonds seriously right now, but they're definitely extremely important for, your long-term financial lifespan. And the fifth way that I see it is going short, and this kind of goes, and coupled with, short-term trading. But going short directly on a, say, company is when you are betting against the company. Unlike a put, for example, you are buying the share and then immediately selling it. So, like, if I put it on an open short, I anticipate rather than the share appreciating in value, it's going to depreciate in value. And this is normally done through margin, and you get a margin account. And you can make a lot more money. So like say if the stock goes down 50%, you can make, depending on your margin, you can make anywhere from 50 to a couple 100% based off of that short. But if the stock price goes up, you can theoretically lose an infinite amount of money, because every time that the stock price goes up, you'll be losing, an inflated percentage of that because of your margin. And your account size will dwindle, and then once you hit about 30% of your total account size, you'll get a margin call, and then you'll have to dump more money into it if you want to continue that contract. And that's if you short at the wrong time for a company and you keep putting money into it, you will actually lose an infinite amount of money. So I personally don't recommend going short straight stocks. I think it's relatively risky. It's high risk, high reward, yes. I don't have that much conviction in betting against any companies, so I do not go short personally. But what I do is I go long inverse ETFs. So you guys know I have the emerging market ones in the portfolio. One of the biggest green plays today, might I add. But for example, like when I saw the emerging markets, they're definitely in a bear market. If the U.S. economy goes into a bear market, they will go only further into a bear market. So I figured I can hedge not only my U.S. stocks, but also international stocks by, betting against the emerging markets with a relatively safer approach and higher gain than I would be if I, say, went short the S&P. So that's just my personal preference and kind of where I saw the current, economic situation we're in. But you can do this. You can do leveraged ETFs also, which is kind of like a safer version of going short. But you can just lose your money so much quicker that way. So, to each their own. But I do think that going short ETFs in a recession, even if it's only like 5 to 10% of your portfolio, is a pretty good way to hedge a lot of the downside potential. So then you can sell those shares and then dump it into, your investments that are now trading at a discount. So that's just a quick overview of 5 ways that I use / am going to be using whenever we hit the next recession. Let me know if you guys want an in-depth video of any of these. I know that this was kind of, just a breath of knowledge of what was going on, but I was actually really thinking about doing an options video in depth, but I don't know how many of you plan on doing options. So that's just something, if you guys want any of these, in depth, just let me know down in the comment section below. Let me know if you guys think that we're heading for a recession, or if this is just normal correction, things are going to rebound. and let me know, out of all these, different options, what do you plan on doing? And, or if there's one that I didn't come up with and put down on the paper, what do you plan on doing for a recession? So let me know. And if you stuck around at the end of the video, make sure to like and subscribe, and I will catch you guys in the next video. Peace.